Endurance, stay inspired, stay motivated, stay in control, and find a balance. I would say it was one of the most exhausting experiences I've had. A couple of times, after about 12 months, I was wondering if it was really going to happen. It was an odd time to raise money as well. We closed the round just before Christmas. So it's a lot, and it's exhausting. And if you have family, it's hard to manage family and raising money. If you're trying to run a business as well, it's even more difficult. I think one of the most beneficial parts of the process for me as an entrepreneur and not coming from the technology background and not previously raising money and actually being a designer was meeting all the VCs and just really taking on board what they were pulling apart in our pitches and our presentations. And what they were telling us was wrong, and kind of really, okay, that market isn't right, can you tell us why it's not right? And you can always go back to them again if you've taken that on board. You iterate your business model, or you implement what they're telling you. And it was a really good mentoring process for me. Market size. Part of the main, Gabby asked me to talk about the success of the fundraising that we had, but I also wanted to tell you the things that I didn't do right and we didn't get right, and one, I didn't qualify the market size successfully. I did it in a very odd way, and maybe it added a couple of months to the process. So this is a really essential part, and if you can get this right early, it will help you. Another thing I didn't do very well was cost per acquisition, proving that we could get the customers at the right price. Our Buildabrand is an invention, and we're very much focused on the invention. And we kind of let these things slip away, and it added a couple of months to our process. But we got it right. But if you can do that work first, it helps. So the tipping point. So once you've taken everything on board that the VCs have given you feedback on, and you've iterated your product or your business model, then the process changes, and they start to get interested. And you stop getting the same questions because you know how to answer them, or you've answered them in what you've changed. And then it becomes very different. And then it's a lot about trust. So if a VC backs your idea internally, they then have to sell it into the other VCs. So they're trusting you, and it's a big sell. So you have to sell to the other VCs, you have to meet the other partners, you maybe have to meet people that they know as well, people that they network with. They might even throw some industry experts at you, and it's a constant sell, and it's constantly creating trust that you're the right person to run the business or make the product happen that they're investing in. Matchmaking. After we got after we picked the VC firm we wanted to move forward with, I'd say we probably had about 2 months of backwards and forwards with our business model. We're looking at our burn rate, our run rate, how we wanted to scale, how we wanted to take the product forward. And I think in that process, what I learned is that you have to know that you have to prove that you know all the answers. And anything they throw at you, you have to know how to deal with it. But also keep learning and be flexible as well. Take on board their feedback, and if you really want the investment, iterate what you're presenting. Sorry, I've gone back. Yes, stay on target. Don't take your first offer. Be wise and use it. You're now on everyone's radar. So as soon as we got the first offer, we then got a second offer. But strategically, I used the first offer to get a higher valuation. So our first offer was valuing us at $1 million, and then the second offer was valuing us at $3 million. I took a phone call in the VC firm that was giving us the first offer, and in the lift, and then I got the second offer. So this whole process was suddenly condensed to about 2 minutes in a lift to get the two different, to get a better offer from the first offer. We had quite an extraordinary experience with the first offer. They actually wanted us to sign the term sheet straight after the meeting. They gave us half an hour to go and sit in a cafe, and then asked us to come back, and they presented us with the term sheet. And that was a really pressured situation, and it's hard to say no. But if it doesn't feel right and you're getting pressured, then even if you've been in the process 12 months and you need the money, I still think it's important to evaluate what's right and say no. And and be wise. So what eventually happened for us after this long process of matchmaking is we actually tipped 2 VC funds in the end. We had 2 angels and a business school. We raised $1.5 million. Once we had the first VCs on board, I was actually decided that it was right to bring more people into the round and get a broader landscape of expertise on. One of my requirements is that everyone that was investing had exited or had been entrepreneurs, except for the business school, but that's a tremendous asset for us to have, so we get a lot of resources from that. So don't be frightened when somebody wants to invest and they've already given you a term sheet. Say, no, I'd like to bring other people into this round. I would like to look for co-investment. I've seen this expertise, and start introducing them, and don't be frightened to take ownership to the process and push it in the direction you want to. Due diligence, it works both ways. I have heard a lot of uncomfortable stories since I've been meeting founders of them having bad matches with VCs or having a really difficult investor director on their board. I think it's really important that as much due diligence as they do on you as a founder, you should do on them as VCs. So talk to other companies they've invested in. Maybe look on their LinkedIn profile. If you know anyone that knows them, ask them how they are, because it's a very significant partnership that you're getting into. And also, we didn't have a lot of we didn't prepare properly for our due diligence, so we had a lot of documentation to catch up on.